Hello, and welcome to myfinanceteacher.org. In this video, let's have a look at a couple of miners, which are IAG Gold and Eldorado Gold. As usual, we're going to look at fundamental valuation, and remember that day-to-day, even week-to-week actual market prices can stray away from these fundamental valuations quite substantially. And usually these fundamental valuations generally work out in the longer term. Besides that, even though I do try to take into account most of these fundamental factors, there are others that I haven't included in the model, such as further dilution of the shares by printing and issuing more shares by the top management. So this is only my opinion on where the fundamental value of these gold miners might tend to converge depending on a range of factors, including gold price, the reserves and the resources that the companies have, their production costs, their debts, taxes, number of shares outstanding. We'll look at the value per share. We also take into account the time value of money, and then we also assign a bit of an importance to insider shares, as insiders might tend to be strong hands supporting the share prices. For gold price, we have three scenarios. Our balanced scenario is 1800 for gold in the longer term. Let's say that's the average gold price over the next, well, say a couple of years. In the conservative scenario, we have 1600 as an average price over the next couple of years. And in the optimistic scenario, we have 2000 as an average price over the next couple of years. To be honest, though, I think even the optimistic scenario is not really optimistic enough. I think there is a very good chance for gold price to reach as high as $3,000 and higher over the next, say, couple of years. And I do have a couple of videos of that on my channel. So subscribe to the channel, stay tuned for more details, and the links to those videos are in the description. By the way, today is 26th of April, and this video first will be published for the members at myfinanceteacher.org with some additional details. And perhaps after several weeks, I will post this video publicly on YouTube. So if you want to have immediate access to our analysis on a range of assets, including precious metals, cryptocurrencies, a range of other commodities, energy, and general stock market, consider joining us at myfinanceteacher.org. The monthly fee is only $10, with the first month only $5, and sometime by summer I will remove this 50% discount on the first month. So coming back to our miners, let's have a look at their reserves and resources. Some of the slides over here are a little bit cluttered. That's just because I try to show you the sources of the information. But the main point on this slide is that IAG has proven and probable reserves of 13.9 million ounces of gold and measured and indicated resources of nearly 10 million ounces of gold. Eldorado Gold has proven and probable reserves of 17.6 million ounces of gold and 8.1 million ounces of measured and indicated resources of gold. For silver, Eldorado has 62 million ounces in PNP and 34.6 million ounces in M&I resources. Moving on to all-in sustaining costs, long-term debts, and taxes that the companies have. For IAG, the all-in sustaining costs are around $1,255. That's the midpoint of their guidance for next year. Similarly, for Eldorado, the midpoint of their guidance is $1,035 per ounce. Currently, IAG has around $508 million in debt, and EGO has $449 million in debt. I assume a tax rate of 20% for all these miners. Without going into details of our various jurisdictions, I just try to simplify things a little bit with the taxes, so a flat 20% tax rate. Hence, what I end up with in this model is a reserve value after production costs, after debts, and after taxes. All of that, of course, per share, and we're looking at the number of shares outstanding for IAG. That's nearly 477 million shares with 0.42% in insider hands. For EGO, we have 181 million shares outstanding with 0.17% in insider hands. As I mentioned, we do take into account the time value of money, and the discount rate I apply is 5%. Whether it's an appropriate discount rate for the level of risk associated with gold miners, you can let me know in the comments below. And we apply this time value of money to the average life of proven and probable reserves of 21 years for IAG based on their expected production next year. And if we throw in half of measured and indicated resources, this average mine life increases to around 28 years. For Eldorado, the proven and probable reserves should last for around 40 years at the production expected next year. And if you add only half of measured and indicated resources to those P&P reserves, those together should last for around 49 years. So all of this data above gives us our conservative valuation, where, remember, we only plug in the price of 1600 for gold, and we only assume companies have their proven and provable reserves only, without taking into account any of their measured and indicated resources, never mind inferred resources. So this is pretty conservative in my opinion. And this conservative valuation for IAG is $4.42, which is already above the ongoing market price, with an undervaluation of around 32% versus that market price. For Eldorado, the conservative valuation is just over $19, which is again already above the ongoing market price, with an undervaluation of around 73% versus that market price. So what this shows me is that as gold has probably recently started its new intermediate cycle, there should be a lot of potential in some of the selected gold miners. Moving on to the balanced valuation, where we plug in the gold price of 1800 and we still only look at the P&P reserves, gives us a balanced valuation of $7.29 for IAG, which is already nearly 118% above the market price. And for Eldorado, the balanced valuation is over 26%, which is around 137% above the ongoing market price. And most excitingly, the optimistic valuation, if gold price averages around $2,000 over the next, say, couple of years. And if we only look at the value of the proven and probable reserves and only half of measured and indicated resources, that gives us an optimistic valuation for IAG of over $12, which is over 260% above the ongoing market price. And for Eldorado, the optimistic valuation is nearly $35.4, which is over 220% above the ongoing market price. So all of that is, of course, very, very exciting. But the question is, can the ongoing share prices actually rise by 100 or even 200% over the next couple of years? Well, let's have a look at the performance of these shares versus gold price itself. Between March 2020 and March 2021, where we have a couple of intermediate cycle lows, IAG outperformed gold by a factor of 2.9 and Eldorado outperformed gold by a factor of 6.2. By the way, gold here is in gold color, IAG is blue, and Eldorado is green. And between March and August 2020, that's between the low and the peak in gold price, IAG outperformed gold on the way up by a factor of 4. And between August 2020 and March this year, on the way down, IAG underperformed gold by a factor of 2.6. IAG dropped more than gold did. Similar situation is with Eldorado when it's outperformed gold on the way up by a factor of 4.2. And on the way down, Eldorado also dropped harder than gold by a factor of 1.5. So if gold returns back to those prices of around $2,000 per ounce, that will be a growth of around 15%. And multiplying that by the outperformance of IAG and Eldorado gives us perhaps around 50% appreciation for IAG and perhaps something around 80% appreciation for Eldorado. Not as exciting as numbers shown here for the optimistic valuation of over 200%, but still quite interesting. So I hope I have grabbed your attention with these two. By the way, for more of such attention-grabbing analysis, consider joining us at myfinancesteacher.org. And continuing to the highlights that haven't entered into the valuation model but might be important. We have reserves estimates coming up for quote gold in Canada in the second half of this year. So that might be an interesting driver for the share price of IAMGOLD IAG. We also have production growth by around 10% at Essakane at Burkina Faso, which was expected actually in the first quarter of this year. So far, I haven't seen any announcement on that, so perhaps an announcement is coming up anytime soon. And IAG also expects some production growth at Rosebel at Suriname in the second quarter of this year. For Eldorado, an interesting highlight is that it also has reserves of copper, lead, and zinc, which haven't entered into the valuation. So perhaps the fundamental value of Eldorado is slightly higher than indicated. Additionally, in third quarter of this year, we expect a feasibility study at their Skouries mine in Greece. And also in the third quarter of this year, we expect some efficiency improvements, recovery growth at Kışladağ mine in Turkey. So all of these could be interesting drivers for stronger share prices for IAG and Eldorado over the next several months. And this concludes the video, so let me leave you with this question. Do you see share prices of IAMGOLD and Eldorado, say, doubling over the next several months, sometime this year in 2021? Let me know what you think in the comments below. While you're there, remember to hit that like button and share this video with your friends. For now, I wish you a wonderful day and good luck in your trades.